IPO price. Enviro Infra is the one that I'm talking about. Arcade Developers, that's another stock that's up close to around 10%. It listed, it saw a sharp correction, and Arcade Developers now is up close to around 12%. And all these stocks are moving on very, very high volumes as well. So keep an eye out there. And also the metal index, at the halfway mark, suddenly you've seen the metal index move up. I think at some point of time, our director will fire some of these stocks as well as indices should come up for you on the screen. But let's get straight to the show then.
No, absolutely. Just want to mention, by the way, the PSU part of the market is also sizzling today. Look at not just PSU banks, other CPSEs as well. I mean, stocks that we have not spoken about in the last couple of days. Stocks like Midhani, for instance. It's just some examples. But the PSU index, the PSU banking index and the CPSE index, they are also firing away and adding to some of the mid-cap flavor that Nigel spoke of. Stocks like KPIT Tech doing really well. We'll focus on some of these mid-cap IT names in a bit on the show. BLS International, look at Niva Bupa, surging 13% now. There's NTPC Green, another recent listing, 10% higher. So the market is really feeling good. That is the short point.
Well, not too many spots where you can see red, but the ones where you can is ITC, Varun Beverages and Godfrey Phillips, the ones which will get negatively impacted if the GST rate is hiked from the current 28 to 35%, as is the proposal that TIMSI has picked up. And this 35% will be over and above the cess, which is already charged. So there is going to be a steep increase in the price of cigarettes. If the companies have to maintain their margins, then expect a price hike. But generally, that's one pocket which is in the red. Outside of that, you also have, Bharti Airtel, which is correcting after the move that it had earlier this week on the back of that ISEC upgrade. So Bharti Airtel is your top Nifty loser. Hero MotoCorp, Tata Consumer, Asian Paints are also down close to about 0.5 to 1%. But again, few losers because we've got an advanced decline ratio at 3:1.
Just one more stock, PVR, the one we pointed out earlier this morning.
Pushpa 2.
And the stock actually started off in the red, but as we speak, it seems the street is coming to terms that maybe, just maybe, that's going to be, a good listing. And I think the initial feelers that are coming in as well is that the bookings are much higher than what was anticipated earlier. And that target, the global collection target, record target is around 300 crores.
Wow.
So it could possibly be...
I heard 1 million tickets have been sold.
Yeah, I mean, I don't want to get the numbers. 300 crores is what I caught on to. There are a lot of numbers out there. But clearly the street is factoring in something. Yesterday it was up, I think, 1.5%. And today, after starting off in the red, it's seen a good recovery from the day.
So you come back next Monday and tell us, watch the movie over the weekend and tell us.
On Friday, we'll know.
No, watch the movie.
Not the collections.
We want a movie review.
Maybe I'll watch it.
Yeah, we want a movie review.
So there you go. We're already planning forward to Friday, as you can see over here. But for the time being, let's look at the next 1 hour and see what strategies you can work with. We have Mitesh Thakur joining in as always. Mitesh, it's a green day. What are the trades now?
Yeah. To me, I think, the stock which I'll look at possibly is Polycab. I think that's, which is showing very strong continuation. So, we have had buys on the stock earlier as well, but now heading towards 7,500, which was the earlier swing high. So buy here with the stop at 73.70. And the other stock which I like is RAC, which can be bought with a stop at about 532 and a target of 560 can be looked at. But that about, I think, I would be slightly tactical in my long positions because I did mention that once we get past 24,350 on the Nifty, we will head towards 24,500. There is significant supply pivot at 24,500. So one, we will be taking positions with tight stop losses where we have already long positions. I think, we'll book slowly partly and see if we have the strength to get past 24,500. I think beyond that, then, another 150, 200 points can happen very easily and very quickly. So trade with long bias, but on your existing long positions, try to book part profits around 33% or 40% around those 24,500 mark. And if you're taking any fresh longs, take them with very tight stop losses.
Okay. Got that, Mitesh. Thanks very much. We'll come back and discuss some more trades with you. By the way, Granules, let's pull that stock up because this is not sounding very good news. The action taken by the FDA is the OAI, which is official action indicated, versus a VAI, which is voluntary action indicated. So this is more strict in nature in terms of compliances, and the stock is reacting to this. Earlier, there were 6 observations, I think, that were made for this particular unit. And now, after those observations, the action is a little more stringent. It's not voluntary in nature. The compliance that will have to be looked into. and Granules is falling on the back of that from the day's highs. But let's talk about some more stocks that are not falling, and KPIT Tech is definitely one of them. And actually, it's appears that stocks like even Tata Elxsi have been moving higher. But specifically on KPIT Tech, what's the news, Reema? There's a positive brokerage note out there?
Yes, so JP Morgan has come out with a note and they've titled it a fallen hero that can rise again. Okay, so this is a stock which is underperformed. They're saying that since October, the stock is down 18%. It's underperformed the broader IT. The two reasons why the stock underperformed: one, they cut their guidance, so said growth will be at the lower end, and two, the QIP, the fundraise that they announced, made the investors fear that if it's a large acquisition, then it could be dilutive. So those were the two reasons why the stock underperformed. But according to JP Morgan, the stock correction is overdone. But there are two catalysts to watch out for, which could turn the investors more favorable. One, any announcement of a large deal. There are 4 of them in the pipeline they need to convert. And two, on the M&A front, if the company, as promised, goes ahead and announces smaller acquisitions, which will, not be a drag on their cash flows, will not be dilutive, then the street will take it in the stride. Now coming to the valuations. They're saying the stock is trading at 41 times forward multiple. That's an attractive entry point because historically, the company used to trade at a premium to peers like a Tata Elxsi and Tata Tech because of higher growth. But now it's trading at an 11% discount to peers. And therefore, it's an attractive entry point. The target price is set at 1900 by JP Morgan. But they've also come out with a bear case scenario. And they're saying that even if things don't work out the way they see it, growth doesn't pan out. According to them, the bear case is a 1200 rupee target price, which means not too much downside from the current level. So they believe the risk reward is now favorable, which is why KPIT is on fire.
Okay, all right, Reema. Thanks a lot for explaining that to us. Gurmeet Chadda joins us of Complete Circle. Hi, Gurmeet. Good afternoon and good to see you. When Gurmeet, I recall you were quite positive on KPIT Technologies. The numbers as well, the stock did see some selling. And you had come on the show and you were saying that, you're quite bullish. What's your view at around this 1400 rupees odd?
So Nigel, we got lucky. We added this when it was around 500-600 levels a couple of years back. It's done very well for us. One of our top 10 holdings in the portfolio, currently slightly upwards of 3%. As a disclaimer, we did add a little bit around 1200-1300 levels, and as and when the stock showed correction. The only thing is, right now we are not adding much since it's already around 3% of the portfolio. The reason is that the management now is guiding at the lower end for this year, which is 18 to 22%. So I think you'll probably see 20% this year. Last quarter in CC terms, it was around 4.7, slightly lower than 5-6%, which the street is used to because it's an expensive stock and it's only dependent largely. It's basically an auto software, which is case in point. And the guidance on Europe was slightly negative. They expected Asia to be a growth driver and Europe to be a bit of a lot of their clients have done downward vision in Europe, which we are aware of. And that's the reason the stock reacted a little bit. But margins continue to be upwards of 20%. They will do a fundraise, which they have indicated of almost 2,800, 3,000 crores, which they want to use for both strategic investment and any inorganic acquisition. They did a couple of acquisitions last year, which were EPS accretive. So we remain constructive on it, but maybe not want to increase it beyond 3.5%, in the portfolio.
The company's also got a higher presence, as you said, in the European region, Europe and America, where we've seen that EV slow down, and their presence in China, which is driving the entire EV growth, has been absent. And the company, when I spoke to them last a year back, said that they are now focusing on China as well, which will help them arrest the growth shortfall that they've seen because of not being present with respect to Chinese vendors. But that's KPIT Tech. Are you adding any of the other ER&D companies?
So, we had some exposure to, Tata Technology, which is, we got a little lucky. Some of the exposure was pre-IPO, not in the PMS, but in the non-discretionary space. The stock, I think, is corrected. Actually, hasn't done anything post-listing. Listed at about 1,100, 1,200. HCL Tech has a decent proportion of, engineering, research, and design. HCL also has a very good software business, which is more than 25% margin for them. And that's after the acquisition. They have written off the acquisition they have done, so it basically contributes to the kitty. At some point of time, there could be potentially some unlocking in the software business as well. And we are looking at one new idea, which is Newgen, which has also corrected from 1600 to 1100. Not necessarily ERD, but they have a nice mix. So the annuity revenue, which you make through SaaS subscription, automation, annual contracts, ATM, etc., is about 65%. Software is around 20%, and their mix is pretty good. Including emerging markets, US and Europe. So we've added that recently, post a 30% kind of a correction in the stock.
Okay, those are some ideas from the IT side. Gurmeet, hi, good afternoon. Just checking your thoughts on Granules. I don't know if I remember this correctly, but you did find the business worthwhile, I think, when we spoke a couple of months back. I could be completely off, but, correct me if I'm wrong. But anyway, right now the news is negative because of this Hyderabad facility that they have, where this is an official action indicator. So not great news. And I don't think it's in sync with how they were guiding the street as well. Your thoughts on the stock?
So we don't have Granules in the portfolio. We discussed the Biosecure Act and the implications on the CDMO space about 2 months, 3 months back. We've been very lucky with Newland Labs, with few molecules commercializing. The stock has really done very well. We were a little stuck with Laurus, but even that has now started moving up. They did one shipment to Merck last quarter. I think we'll pick up this quarter. And I think JFM is where you will see a better asset turnover ratio and better traction coming in the CDMO business. They were struggling with the ARV and the API piece for multiple reasons. So that's done well. And we are tracking a few more names in this space. We believe that pharma outsourcing, especially contract manufacturing, not CRO, which is contract research, which is slightly less margin accretive. But CDMO could be a big space. The entire opportunity could be upwards of $50-100 billion for some of the Indian companies. And a lot of capex has happened. Look at what Divi's has done last 3 years, upwards of 3,000 crores of capex. Laurus has done more than 2,500 crores in last 2-3 years. There's a lot of capex which has happened in last 2-3 years, and very targeted capex. So my sense is this is one space we are looking for more opportunities. We're trying to see some more opportunities in women healthcare space, which is where there's a lot of action happening. So that's one space we are pretty constructive on.
All right. Sorry. Laurus is a stock, correct, that we had discussed some time back, not Granules. Just hang on. We also want to discuss NTPC Green with you in just a bit, Gurmeet. But before that, let's see if we can get Vinny in and see if there's any further... Okay. Yeah. So I think Vinny will just join us to see if there's any further commentary on this, because what happened was this inspection was carried out somewhere in August, September, I think, and then some 5-6 observations were made. The street was hoping that this will be sort of resolved and this will be a voluntary action, but that's not the case.
Yeah, and the problem is the company was sure of a resolution. So that's why you're seeing this sort of a fall on the stock. It's down close to 7% from the time this news did come out. But Vinny, she's our in-house expert. She joins us to help us out to understand this sort of a fall. It's come out of nowhere, Vinny. Please go ahead.
Absolutely, it's come out of nowhere. So because the company in their Q2 con call expected a positive move coming in from the US FDA, they're expecting a resolution. So now the company has informed that this Gagilapur facility, which accounts for around 70% of the revenue, comes in from this facility, which is in Hyderabad. So Form 483 is given 6 observations for this facility and an OAI, official action indicated, which means now more action will be taken on this purpose till the whole problem is resolved. So yes, this is a bit of a negative, actually a big negative coming in for Granules India, and that is why the sharp fall that we're seeing coming in for the stock. Like we were mentioning before as well, in September 2024, that received this voluntary pause for production for this facility as well. And they had said that in October, they resumed the facility partially in a staggered manner in terms of production. But seems like now that we need some more clarity on that how is that going to go forward as well? What is the current production scenario going to be? But 70% of their revenue comes in from this facility. So we'll be keeping an eye out on more details and sort of what sort of observations are this as well. With 6 observations from 483 and an OAI is a negative for Granules India today.
Wow. 70% of the revenue comes from this plant. That's massive. That's huge. And that's the number to really keep in mind. That explains the kind of huge negative slam dunk on the stock. Vinny, thanks for that context. It's really helpful. So yeah, this, like Nigel says, has come out of nowhere, and it's a 10% fall now from the peak of the 8% down and sliding. The stock is picking up a lot of momentum on the way down.
Okay, all right. Well, let's talk about brighter things then. NTPC Green, that's up close to around 10%. The stock is up over 30% from its IPO price. I recall having a chat with the management who was telling us that the EBITDA number from sub 2,000 crores in the past year, well, it has the potential of moving up drastically by nearly around 5 times, in the foreseeable future. And, by 2032, they were talking about 35,000 crores or thereabouts. For the time being, the street is latching onto that. Vivek joins us to help us out to decode this move as well as give us an update on the valuations. Vivek?
Well, that's right. So good afternoon, NTPC Green, shining bright given the fact that today is first at the upper circuit. Remember, the IPO itself, at that time, analysts had pointed out that the IPO was priced to perfection, and post-IPO or post-listing, the stock has rallied 30% from the price at which the IPO had actually come out. So now when you're talking about the market cap, at the upper end of the price band, it was valued at close to 91,000 crore. Today, in excess of 1.2 lakh, almost 1.2 lakh crore is where NTPC Green is actually valued at. Now, when you're talking about, what the management told you, that's very important. We'll just highlight a few more points. You did mention about the EBITDA targets that the management has set. Company, in terms of commissioning, remember currently they have only around 3.3 gigawatt of operational capacity. But the company says by FY26, 5,000 megawatt or 5 gigawatt will be commissioned. Almost 19 gigawatt of commissioning targeted by March 2027. Funding will be done at the most optimum price. Remember, NTPC, the parent, enjoys funding at the lower levels, and NTPC Green, the management, did confirm to us that they too will enjoy the same low rate of funding that the parent enjoys. EBITDA, what they guided us to was that they look at close to 65 lakhs per megawatt as far as, what is it that they look to achieve as far as operational efficiency is concerned. FY24, like you mentioned, 2,000 crore EBITDA. They're looking to grow up to 35 to 40,000 crore EBITDA by 2032, where capacity is expected to touch close to 60 gigawatt. In terms of valuations, and that will be the key point to watch out for. Remember, price to perfection, and now it's even more expensive. In terms of PE ratio, FY25, 194 times. FY26, 88 times. FY27 expected is close to 56 times. These are antique estimates. EV to EBITDA, a little bit more palatable, but still quite expensive, especially when you're comparing to global peers. 52 times FY25, 28 times FY26, FY27 19 times, and price to book 6.4 times FY25, FY26 6 times, and FY27 5.4 times. So expensive, but nevertheless, the stock has seen quite a bit of a good pop, and almost 30% from where the IPO is actually priced at.
Okay, all right, Vivek. Thanks a lot for that. Well, Gurmeet, what do you make of this one? As Vivek said, the market cap is close to around 1 lakh crore. In the last year, they did an EBITDA of around 2,000 crores approximately. So if you compare it on an EV upon EBITDA level, it looks like 50 times. But going by what the management is saying and the guidance they gave, as Vivek told us, is 65 lakhs per megawatt. So mathematically, by 2032, they can do in excess of 35,000 crores of EBITDA or 40,000 crores. Just put it back of an envelope calculation. It comes to around 39,000 crores. In that case, it would be available at less than 4 times. The question is, can they do that? What's your view on the stock? IPO at 108, today 140 rupees. Your take?
So Nigel, when you're bullish, you tend to discount 2030, 2032 multiples. But one thing is also the near-term visibility. They are currently at 3.3 gigawatts, and they're already talking of almost 20 by FY27, which is a 6x growth. And that's why, I think it came at a time when the market sentiment was quite bad. Otherwise, you would have probably seen this price action the way we have seen with most clean energy space, whether it was Vari, whether it was, most of the names in this space. But I think market is trying to discount, a lot of good news early in this space. My sense is the parent NTPC could be a better play. Valuations are reasonable. The stock has corrected from 440, 450 levels to about 360, 370. And they have both, the thermal capacity as well as, the RE capacity coming up. RE obviously will come under NTPC Green, which is 60 gigawatts. They're also planning another 80, 90 in terms of, the thermal capacities. And we've seen, peak load factors, which is good for players like NTPC because of the pricing model they have. Very good dividend yield. And you'll get the entire play. It's almost 45% of the country's power generation capacity. So I think the parent looks more reasonable right now. Also considering an attractive dividend yield. NTPC Green also, I would probably prefer to buy it a little lower. But yeah, I mean, between the two right now, probably NTPC makes more sense.
Okay, so the vote goes to NTPC. Gurmeet got it. And Gurmeet, before we let you go today, Swiggy or Zomato? No, I'm not asking about where you're ordering dinner from. The stock, we are going to get numbers today. I mean, first time since listing from Swiggy, right? And the stock's been doing so well, playing catch up. Your thoughts? Which one? Both? Neither?
Both actually, with Swiggy probably being 75, Zomato being 75%, Swiggy just to cover the dark space. Because, I've said this earlier, Swiggy, the winner takes all. And if you see in Blinkit now, the order value for Blinkit is around $600. The number two, number three is around 300. So it's also the contribution margin. So as the AOV picks up, the number of orders also are more for Blinkit. So the AOV picks up, you tend to see a better valuation coming in Blinkit. But Swiggy, we were lucky, as I was telling Prashant the other day, we did a lot of unlisted Swiggy for our clients, not in the PMS format, but for long-term holding when it was available around between 300 to 340 bands. So we got lucky there. And I also think the out-of-home consumption, which is the district app, which is the ticketing business, the dine-out business, will also probably start contributing. So once you have a nice platform, there are multiple smart cases which can be built around this. So I'm pretty constructive on Zomato.
Okay. Thank you, Gurmeet, for joining us this Tuesday afternoon. We will slip into a very short break. We'll come back and get chatting with Vaibhav Sanghvi from ASK Hedge Solutions.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
Okay, welcome back. Things are still up for the markets, 184 points on the Nifty. But in the last 30 minutes, at least, we've not piled on more gains. We've held on to what we have. The Nifty Bank is up close to about 640 points. Vaibhav Sanghvi, CEO at ESK Head Solutions, is now joining in. Vaibhav, is this the December Santa Claus rally that we're seeing?
No, of course, Rima. I think what we have seen in the last 2 months on back of relentless kind of FPI selling. First, it was realignment towards China. And probably in November, I think what we saw is basically flow kind of moving towards US from different jurisdictions or different geographies. Now, as we say, I think we have seen FPI flow getting kind of abated. And as we end towards, or as we near towards December end, is when we generally see FPI activity kind of, decreasing. Which, in all likelihood, my sense is basically we are starting to look at the consolidation phase and probably some move higher. And in probably January, we will be looking at anticipation of union budget as well. So all in all, I think the next 2 to 3 months would be interesting, provided that the FPI flow is the way it is in terms of the selling kind of over, and probably will look to kind of invest in a gradual manner.
Okay. Vaibhav, hi. So the next big event that we're walking towards is the RBI policy, right? And it's become very eventful now with this whole GDP print and talk of a CRR cut. But anyway, tell us, what are you doing? Financials, large banks, NBFCs, gold financiers. There's just a lot that's happened in the last couple of weeks.
Absolutely true, Surbi. I think a lot of stuff happening, beneath this sector. And if you see the last quarter trends, there are pockets where there is some amount of stress visible, like an MFI or probably personal loans. There are segments where people are doing extremely well, in terms of large private banks, along with the financial services as well. So very diverse sector in that sense. And for a long short fund, I think it is an apt opportunity for us to kind of play within the sector on both the sides as well. So we do like private banks, select private banks, who has very relatively lower exposure on MFIs and personal loans. And to financial services is something which we continue to like as well. So those are the segments we'll continue to be positive on. And tactically, if we do see some amount of action from RBI, over the weekend or next week, my sense is basically we will see that NBFCs, can play a shorter term bounce going from here onwards. Of course, if nothing happens, then you might retrace that as well. So that is how we are looking at this.
All right, Vaibhav, just hold that thought. I want to ask you about the IT space. I recall earlier this year, I think you were a little bit bullish on that sector, but just hold on to that thought. Granules now, it's a temporary freeze. It's down close to 10%, I think. So I think it's a temporary freeze that's played out there. It's down close to 10%. And a couple of other names actually from the pharma space, Strides, that was down close to 3.5%. That suddenly moved into the green. So you'll have to just, check this out a little bit more. But Strides, I recall from the lows of the day, it's seen a sharp recovery on that one. So Strides Pharma comes up for you on the screen as well. Big uptick is what we've seen in the last few minutes. Hi, Vaibhav. Good afternoon. Good to see you in. That call on IT, it's moved perfectly according to the plan, I think. So earlier this year, you all were bullish on IT. How well placed right now? Because the street believes everything is good for tech. Earnings are going to outpace what the Nifty is going to do in the coming year. Burst is in the price. Spending is going to pick up on services, not on equipment, which will benefit the Indian IT companies. Are you in that camp, even post this big rally that we've seen? And Trump, obviously, they believe is good for tech.
No, of course. I think there are various variables actually getting in favor in that sense. One, of course, we're seeing some amount of currency depreciation starting to happen. Two, I think the whole generative AI, space or fears which were there earlier is now actually translating into a good opportunity for all the top kind of players who are kind of starting to adapt pretty quickly. And in addition to that, if Trump comes and kind of reduces their corporate tax, there's obviously going to be some more spend, lined up later on. And lastly, from a channel check perspective, we do see very initial signs of discretionary spend coming back as well. So all in all, in a markets where in the last quarter we have seen disappointment in terms of the results, in terms of revenue and profit numbers, here is a sector I think which is within the whole segment is looking up, from forward demand perspective, while the margins kind of being maintained as well. So this is a sector which we are keen on and look to buy on dips, at every dips, from here onwards as well.
What's the call now on tobacco and tobacco-related companies now? There is fear because of this, the GST proposal that's come through about raising the tax slab. Would you avoid it? Would you go short?
No, rather than entering the realms of speculations here, I think, let's wait for what comes out if there is anything. And then later on probably take a call. But all in all, from a staples perspective, as if you see, we have seen considerable pressure on the demand side in the last quarter, and probably also some amount of unorganized competition coming back, post the GST, post the COVID period, which actually kind of had dwindled. So, probably we'll pay more attention to that rather than this. So let's see how the coming quarter goes about, and some commentary, whether the commentary kind of improves from the from the companies with respect to the demand.
Okay, so yeah, demand continues to be a concern, I suppose. So, Vaibhav, round it up for us. I mean, now if I ask you about a strategy, say for the next 6 months, as we're rounding up the year as well, you mentioned some areas like banking, IT. What gets top billing in your portfolios, and what is it that you're going to stay light on?
See, I think to be stayed light on essentially would have to come from the global side. Any sectors, like metals, mining, commodities, other sectors which we are kind of avoiding. Also from a PSU basket, which are non-reform oriented sectors, but more on cyclical side, are the ones we are, avoiding as well. Lastly, from the banks which have continued to be higher exposure in terms of the MFI or stressed segments, are something which we are probably avoiding as well, from a portfolio standpoint. And from a market standpoint, I think while the next 3 months are likely to be very eventful, purely because, of course, I think as we will see union budget expectations, quarterly numbers coming from January, a lot is going to happen. Lot many variables are likely to shape up going forward, with the underlying fact that on an overall basis, the economy has weakened, and probably the earnings also are likely to continue to remain weak. So too many cross variables, but essentially good for long short in that sense.
Okay, all right. Vaibhav, we thank you for joining in and filling us in with your quick take on markets, individual stocks and sectors as well. Looking forward to chatting up with you in the coming weeks. Otherwise, we see you straight in 2025. Well, by the way, just a quick point on Granules. In the cash market, it's down. And in the F&O market, the open interest has surged up. The last I checked, the total open interest, you pull up the open interest plate, it's moved up. The total open interest has moved to around 117% of MWPL, which means in all probability, this one is going into the F&O ban for tomorrow. So you should pull up the futures plate as well. There's been a surge in open interest out there, which explains why, probably at the end of the day, we'll see that this one goes into the F&O ban. Well, I'll tell you what, we'll slip into a short break, come back, we'll continue our focus on markets. We'll also get you all the action from the dealing rooms. Nimesh is waiting for us on the other side.
For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Welcome back. A couple of other pharma names as well have recovered from the day's low. Pull up Oro Pharma. The stock was in the red. That's seen a big uptick in the last few minutes. A good move is what we're seeing on that name. We already told you about Strides, which should come up for you on the screen as well. I'm talking about some intraday charts, so let's get them quickly up for you. You have RBL Bank as well. It pulled back yesterday, but now it's moved to the high point of the day. So RBL Bank is another one that comes up for you. Now spiking away actually as we speak. Recovered 6% from yesterday's lows, today building on the gain. So it's a 10% recovery from the lows that we saw yesterday. As promised, let's get to D-Street chatter. Nimesh joins us to tell us what is he picking up in terms of dealing room action. Nimesh, take it away.
Well, market at day's extremely strong day, and this is backed by very large FI buying. So I understand there is a large basket buying, largely the mid-cap names are yielding FI yesterday. So clearly it looks like the flows have turned for the positive as far as Indian markets are concerned. The Nifty bank is up, is also up more than 1%, and that's largely led by the large cap private banks, especially HDFC Bank and ICICI Bank, which are well bid by large institutions. So it looks like the buying interest is back on the private bank names today. Technically, now the Nifty to watch would be 24,400 on the Nifty. If that gets taken out, then you will see a further upside from current levels. That's the overall feedback. But again, the large feedback is today is a very large basket buying in the Nifty and the mid-cap names at a leading FI desk.
Rocking, so that's great news. Ramesh, what about individual stocks though? What are you picking up?
In terms of individual names, the first couple of large blocks which are expected, which is in Indus Tower as well as in Kotak Mahindra Bank. Both have been consolidating of late, but I understand there's going to be large blocks in Indus Tower as well as in Kotak Mahindra Bank. In Indus Tower, the feedback is that the strategic investor will sell and will be a clean out trade. And in Kotak Mahindra Bank, there is a feedback that a large sovereign fund is looking to sell a large chunk in Kotak Bank. The second name is the couple of stocks which are under pressure on the back of block deals, TBO Tech as well as Zentech. Both are under pressure today after large blocks. In TBO Tech, the feedback is that the private equity investor was a seller, and in Zentech, the buzz is that maybe the promoter entity was a seller. So the disclosures in both the names would be quite interesting. The third name is PG Electroplast. While the stock has been in a tear in the last couple of years, it's almost at 50-week highs, been consolidating the last couple of days, but I understand that the company is likely to raise funds via QIP very soon. Remember, the board has already approved the fundraising plans. Now understand that QIP can launch this week. And the last name is Latent View. After a long time, some bit of interest seems to be back in this particular name. So there are buy flows at FI desk. In fact, I understand some large HNIs too are very active buyers in Latent View in last couple of days.
Okay, thank you very much for that. The stock had gone very quiet. Year to date, it's only up 3%. In the last 1 year, the stock is down 4%. So it's not done anything in the last 1 year. But today, as Nimesh said, interest is back in the counter. It's up close to about 4%. Mitesh is now back with us for a few BTST calls. Mitesh.
Yeah. Well, I think, the metal pack is looking interesting to me. I'll take a BTST on Steel Authority with a stop at about 121.70 rupee kind of a stop loss and a target of 125. And that apart, I think, the other stock which I would recommend for a BTST would be State Bank of India. The banks, have also picked up. State Bank today especially has had a good day, up about 2%. So keep a stop below 846 half year, look for targets of 870.
Okay, all right, got it. Mitesh, thank you very much for that. Good to have all your trading calls through the day today. We'll touch base with you in the morning again tomorrow. Let's move on. Now, insurance companies are in focus once again. The government is looking to change investment regulations for these companies. And this could have something to do with the fact that the parliament session is on and there could be an amendment to existing insurance laws. Yesh is here with the details. Yesh, what are you picking up?
There will be many interesting proposals coming out in terms of what the government has proposed with respect to amending the Insurance Act. Another interesting one out of that could be the changes that the government is looking to make with respect to the investment regulations for both life, general and health insurance companies. So far, the investment regulations in terms of the investment limits, in terms of what insurance companies, how much can they invest in various asset classes is embedded in the Insurance Act itself. What the government is intending to do is to partially pass on the authority to specify investment limits for insurance companies in different asset classes. Case in point, for life insurance companies, what the government has proposed is that 25% from the life insurance company side will be invested in central government securities. Another 25% will be invested in central plus state government securities, which means 50% of the total investment will be embedded in the Insurance Act itself. The regulator will have the authority to decide the limits, whereas when we speak about the investment limits on the balance 50%, which could either be in terms of equity, corporate debt, infrastructure and social sectors and other approved investments. Possible if the IRDA wants to increase the equity investment limit from the current 15%, it could do so with this proposal being approved. For general insurance companies, the government has said that 25% in government securities, another 10% in central and state government securities. With this, 35% is gone. With the balance 65%, the IRDAI to have the authority in terms of allowing insurance companies, that is general insurance companies, to invest higher or lower in different asset classes like equity, social infrastructure sector or any other approved investments. Remember, the stakeholder views on these changes are expected by December 10th.
Okay, all right. Yash, thanks a lot for that. Well, Jay Bala of Cash, thechaos.com joins us on the show. Hi, Jay. Well, we've had a good pullback. Is it part of a pullback, and is that pullback done now? Will you expect the markets to go ahead and retest lower levels? So that's on the Nifty. You could answer that. And also Reliance Industries. That was the one that was underperforming. And the bears were cheering that. Unfortunately for the bears, now you're seeing that Reliance Industries is showing signs of coming back to life. Do you think it can pull back further from here?
Hi, Nigel. Good to be here. Yeah, what you're pointing out are the right things. And Nifty's bounce, as I've been pointing out, last time I had expected Nifty to drop to about 23,800 and then bounce back to 24,400 to 24,800. So we are at the minimum satisfactory level for the counter trend bounce. So once we will have a firm confirmation that the downtrend has resumed only if Nifty goes back below 23,873. But if Nifty were to drop below today's low, that will be an early indication because we are at the minimum satisfactory level. But I would expect the bears to concede little more level. Say if even 25,000 were to come through, that will put the bulls in a state of complacency, and we're going to probably going to see the next leg of a powerful decline begin. So watch out for resistance at 24,550, and also watch out for the previous day's low getting broken. That will be an early signal that this was a confirmation that this is just a counter-trend bounce. And Reliance, once again, Reliance resistance has come at about 1325 to 1340. If Reliance was to get rejected around these levels, that will again be an endorsement of the bearish case.
Okay, got that. Swiggy numbers on our screen. I think we'll get our team to also show us the quarterly comparisons, the quarter on quarter, because it's all about reducing burn. And I think it'll be helpful if we look at Q2 versus Q1, because the losses are still there, but the losses are reducing. They're definitely reducing year on year, but let's see if we can get the burn comparison quarter on quarter as well. Right now, the stock is a little flat. The EBITDA loss number, the consolidated losses is 625. The EBITDA loss is at around 555, if I saw the flash correctly. We'll try and get Mangalam as well in just a bit for further analysis on these numbers as they play out. Since we're on the subject, I don't know if you've been tracking Zomato. If you could give us some more sense on this. Jay, have you looked at Zomato charts at all?
Yeah, I do watch it quite closely, and it's quite a high beta one. And the recent high at about 300 and change, that's looking like it might have clocked a top, but or it might just have one more top. But we are very close to seeing the stock top out, but it's not yet a short. So if you're having long positions, keep a tight stop at about 260 and change, and that will be the best strategy to do for Zomato.
260 is the important mark, okay, on that one, and now you can short it as well because it's in the F&O market. So that's another point, though it's made its way into the Sensex and probably could make its way into the Nifty as well. Jay, tell us about individual stocks. I think you have a call on Coromandel as well as L&T Tech. Levels you're looking at both those two?
Yeah, that's right. L&T is a more straightforward short because the stock has been underperforming from its all-time high of 6,000 and change, or probably exact 6,000. It's come down, L&T Technology, it's come down in 5 steps and then retraced exactly 61.8 Fibonacci retracement of the decline. And it's getting rejected from that level. So L&T Technology is possibly heading to somewhere close to 4,600. A stop loss at about 55.50 will be the best case scenario. When it comes to Coromandel, it's more a conditional short. It might have finished the move from the October 2024 low at its recent high, and probably finishing a medium-term move from the 2023 low. So if it were to drop below 1745, that will be an indication that it's dropping to at least 1500. So maybe a much deeper correction. But we'll take this as a shallow correction and keep a stop at about 1839. Conditional short only if it were to go below 1745.
By the way, for Swiggy, the losses have marginally expanded on a quarter-on-quarter basis. So there is top-line growth. The top line has gone up by about 11-12% sequentially at 3,600, which compares with 3,200 in the June quarter. And the internals are up for you on your screen. But the EBITDA loss has now expanded to 555 crore versus 544 crore. And even at the bottom line, it's a marginal expansion to 625 crore. So down year on year, but up quarter on quarter.
Quick commerce is still burning because I've looked at the segmental breakup, and that's where the fight is, right? Can you take on the might of Blinkit or not? So in quick commerce, the loss is coming in at about 317 crores versus a loss of 280 crores. This is quarter on quarter, Q2 over Q1. So the quick commerce war is on. But in food delivery, they've done really well. The profits there are expanding to, I think, about 121 crores from about 67 crores. So food delivery, they're on track. It's about the big fight for quick commerce. The losses in the out-of-home consumption category Perhaps that's the dine out. Mangalam will tell us some more, but perhaps that's that segment. That's where the losses are collapsing as well. The issue is obviously quick commerce and how quickly can they reduce the burn there. Okay, we've actually got Mangalam with us. Mangalam, why don't you tell us? So what's happening with the loss picture?
Well, the picture with the loss is largely led with investments because the company had said that, they are looking to add a lot more to their overall quick commerce, dark stores, etc. as well. So two things are extremely important in Swiggy to look at. The first most important thing is that how the overall revenue picture has come by. 30% growth is slightly higher than, its peers when it comes to the overall revenue growth. The second thing you have to look at is where is this revenue growth coming from? That revenue growth is coming in from the quick commerce business, where on a low base versus last year, the quick commerce revenue has actually grown by about 135%. The second thing that you look at is how the operational performance of the food business has been. So if you look at the food delivery, out here the revenue has been around 22.3%. That too, on a slightly lower base than Zomato. On a percentage basis, it's a tad higher than what, Zomato has reported. But out here, the heartening fact is both QOQ as well as year on year, the EBIT has increased. So if you look at EBIT in the food business, it's coming at around 122 crores, implying a margin of 7.7%. So that's telling you that on an operational basis, the food delivery business is on steady improvement. So long as the revenue growth continues out there and stays steady, margins will come by. The other thing is that in quick commerce, while the revenue growth has come by, remember the EBIT has stayed steady. So that means that the company is using all the excess money that they're making in their existing stores to go ahead and improve their dark store network itself. And these are numbers which have come in from pre-IPO. So post-IPO, with the kind of funds that they will infuse in expanding their dark stores, etc., will start reflecting from the third quarter itself. So short point, if you have to look at Swiggy's second quarter numbers, the food delivery operating performance has improved. There has been good revenue in quick commerce, but all of this over the near future has to tie up to operational improvement, and that is the question that we'll probably probe answers from the management.
Thank you. And there is a conference call today at 5 p.m. for Swiggy. And, Swiggy still has some ground to cover in terms of catching up with Zomato on quick commerce. So Swiggy's quick commerce revenue is 490 crore. And for Zomato, this quarter, same quarter, the September, it was a number in excess of 1,100 crore rupees. So Swiggy's quick commerce revenue is half of that of Blinkit or Zomato. So there is some catch up to do. And for Zomato, the quick commerce, at least at the EBIT level, had turned positive. While for Swiggy, there is still that loss. But thanks, Mangalam, for those details. Get into a break. We'll come back with more market talk. Stay tuned.
CNBC-TV18 has been synonymous with the Indian stock market. So the two of them go hand in hand. Stock market is now becoming the anchor to the household balance sheet. And the likelihood is that households will continue to invest more and more. So given that, I think CNBC-TV18 is a very reliable source of both analysis, information, as well as guidance to the millions of retail investors in India.
Welcome back. CE Info Systems continues to remain under pressure for the second day in a row. Remember, the news is that the company's current CEO, Rohan Verma, is floating a new venture which will focus on B2C, which basically means like Google Maps. That's the opportunity that he's trying, because MapMyIndia is known for its B2B map software, which means they will directly sell to a Hyundai, and then Hyundai will then put it in all their cars. So MapMyIndia's focus has been B2B or B2B2C. But now Rohan Verma believes there is an opportunity in B2C, but he's decided to do it separately. But you know, there was a very important clarification coming out from the company. In the press release 2 days back, they said that MapMyIndia will subscribe to 35 crore of CCDs in lieu of a 10% stake. The management said that after backlash or negative feedback from the minority investors, they will not be subscribing to 35 crore, which means MapMyIndia is not investing 35 crores for that 10% stake. They will get a 10% stake, but only by putting in close to about 10 lakh rupees. But once, so this was a big overhang, which is now out of the way. But another reason why investors are still unhappy is because there is no royalty being paid by the new entity to the listed entity for using the brand name Mappers. We asked the management, why not? Why aren't you paying a royalty? He said that, well, MapMyIndia is getting a 10% stake in the new entity practically for free. So that pretty much covers the royalty. Another concern could be a leadership vacuum, because now Rohan Verma, who is the CEO of the company, is no longer going to be involved in an executive capacity. He will be present as a non-executive director. So, will this hurt the company's prospects? Because they do have a goal of achieving 10,000 crore in terms of a top line. So that's CE Info Systems. Despite the management clarification, the stock is still down close to about 9%. Jay, is CE Info Systems a stock that you've looked at? Because it's gotten hit hard over the last 2 days.
Yeah, I don't look at this stock quite often, but I just had a cursory look at it. It's been in a downtrend since July, so it's not surprising that the stock is falling off. But yeah, so the good news is that probably it could be close to finishing off the correction that started from July, somewhere about 2,700. So I guess the worst is probably done, but it's not an investing candidate or a trading candidate yet.
Okay, all right. Finally, as we are winding up, Jay, since you are still a little cautious, you're not fully convinced about this move that the market has made, any trades you'd like to leave us with, near-term trades?
Yeah, I've been looking at quite a few stocks. So, but Voltas is something that I had pointed out last time. It triggered the buy level for me, but you need to keep your position sizing quite small on the long side. So probably it has potential to scale somewhere close to fresh 52-week highs, but a very tight stop loss of about 1622 to 1600 is a must for this. But I don't see any long trades other than this, and I've given 2 short trades. But the most important thing that's for me is that there's a very rare signal for the US markets. Nvidia, if it were to drop below the 27th November low, that's about 131.8. It probably would mark the beginning of an important change in trend for the US markets, because the US NASDAQ 100 is at all-time high and the semiconductor index is below its 50-day moving average. There's just been one occurrence in 2018. When that happened, the NASDAQ, when it caught up with its 50-day moving average, there was a 20% decline. So watch out for the NASDAQ to catch up with the 50-day moving average. That might be a very significant change in trend for the US markets. So that will have additional impact on the Indian markets, where the Nifty IT index is still holding up, and that's been the only index that's a holdout. So watch out for the shift. It's a very important point of data.
All right, and just the other call that you're giving us is that the dollar index has the potential to go higher from here, right? Jay, very quickly.
Yeah, I'm maintaining an objective of 109.5. Then that will be a very important test for it. So that's an important resistance for me. And in the long term, I'm quite bullish. But what happens at 109.5 will be an endorsement of the medium to long-term trend for the dollar index.
Right, Jay, we'll keep you for a little bit more because we'll have you on Markets Forward as well. But for the time being, we need to wind down on the show. It was a solid trading session with the Nifty ending with the gains of around 170 points. Adani Ports was the biggest gain on the Nifty, up 6%. NTPC did well with a gain of around 2.5%. And Adani Enterprises as well did well. What didn't do too well? You had Bharti Airtel as well as Hero MotoCorp, that both of them came in for some profit taking. But the party was in the broader markets. You had new listings. Enviro Infra, that stock was up close to 15%. Niva Bupa was up more than 10% in trade today. NTPC Green was up more than 10%. I'm talking about these names because they all listed in the last 30 days or so, and both of them had a very, very good run. A few more gainers in today's trading session on high volumes included HCC and HEG, both of them flying away in trade. On the flip side, the biggest loser on the downside was Granules. Well, the street was hopeful for a resolution that came about in one of their plants, but the facility that contributes more than 60% of their total revenues, well, that one's back in the dock, and now the fear is things could escalate on the downside from here on as well. So that's why that stock did see a sharp sell-off in today's trading session. Well, on that note, though, we'll wrap up on this edition of Closing Bell. You stay with us because Markets Forward comes up next.